Hello, my name is Brenda Hayward. This video is called Reasons to Consider Paying Off Your Mortgage Early. Some of these reasons to consider can be used as a reminder of the things to do while building or starting your journey towards paying off your mortgage. It is time to empower yourself with things you can do for yourself. Number one, saving for a larger down payment as you consider putting down a larger down payment prior to purchasing a home. Remember, the more you have up front, the less you will need to borrow. Ask the loan officer or do the calculations for yourself to know how much would your monthly payment be for a 30-year or 15-year loan. A conventional loan requires a 20-year 20% down or will put less in the purchase of your no home. You will have to add private mortgage insurance in case your loan defaults. By putting 20% down towards the mortgage, you avoid the extra cost of the PMI and can reduce your loan amount or the term length. The money would have been using to pay the PMA could be used to make extra payments during the years, which helps to pay off your mortgage quicker. Two, consider shopping around for interest rates. Shopping around for the best interest rate available to you is part of doing your research prior to making a decision on which lender can be a partner for your mortgage rates. You will agree on prior to making a home purchase. Compare options prior to signing on a dotted line. Read what they are offering and use your calculator. One lender may offer a shorter loan period. However, the mortgage rate offered may make the payments very high. Paying off your mortgage may be important. However, would you be able to afford to do that? Please pull out your budget and ensure that the figures will work if you select the shortest mortgage term. Yes, you may have thought about putting more money down. However, you need to ask how much will it cost once you consider adding in the closing costs for any property. Please don't be afraid of moving on to another mortgage lender if the mortgage rate and total for closing do not feel right or if you're getting a great deal. Three, consider setting a budget limit on the mortgage. Checking and verifying your limit is a way of being able to afford the property once you move in. Yes, everyone has an idea of what the property should look like, from having new appliances in the kitchen to having a backyard with no grass to enable you to put bricks down until you can add a pool in a few years. However, often, sometimes the list of minimum requirements force us to extend the budget further than we should. If you want to pay off the mortgage early, please only get what you can handle. Check out your budget. Don't go above your projected budget. If you have time and like to do research, please review the budget affordability calculator that is on your internet to see how much you can truly afford and try to stay within that limit amount. By being limited to your projected budget, you must likely will have funds available at the end of the month. If your plan is to pay down your mortgage payment at this time, you have extra money to put towards the principal within the mortgage. Four, consider using a shorter term loan. Now that you reviewed your budget and your funds are right and you have used the mortgage calculator, this is an opportunity to shorten the mortgage term on your loan package. You have many options when it comes to which type of loan you can choose. Many first and reoccurring home buyers choose a 30-year mortgage. However, if the funds are available and you are looking to pay off your mortgage faster, the 15-year loan is a good deal for you. Before you make that final decision, ask your lender if they could give you the estimates for a 20 or 25 year, which is still may not impact your current fund availability, then make the decision on what fits your best. If you were offered a 30-year loan and felt the payments were doable, then a 15-year payment is much higher because the loan will be paid off in half the time. If you are able to pay a 15-year loan, remember that interest rates are lower, pay less interest over time, and you will pay your house in a shorter period of time. If the 15-year loan isn't an option, then as you get to pay your raises, start to put some extra money towards the principal payment to reduce the time left on your mortgage. 5, consider making bi-weekly payments. The idea is starting bi-weekly payments allow you to make the mortgage payments every 2 weeks with an average one payment per month. However, that is still 12 payments per year with the bi-weekly payments. You end up paying 26 payments or a total of 13-month payments. Yes, you will begin making an extra payment towards the principal per year. The extra payment reduces your interest over time, allowing you to repay the mortgage faster. Please check with your lender to see if the bi-weekly plan is available on your mortgage loan. Also, check with the lender to see if additional funds received from you will go towards the mortgage principal only. Please follow every instructions they give you if they allow this process. Remember, the power to make changes in your future is yours. So since you are reviewing this video, you have thought about what your future should look like. Utilize that power and start today making that change towards paying off your mortgage. Just to let you know, I am not a real estate agent, accountant, lawyer, or loan officer. Please let me know if you like this video by clicking a thumbs up or subscribing or leaving comments below. My name is Brenda Hayward, and thanks for your time.